Welcome to Shareholders of a Better World, brought to you by TBLI Group. At TBLI Group, we have an established reputation as an organization dedicated to building the ecosystem of global sustainability and impact investing. We're doing this through educating, advising, and facilitating transactions in global sustainability and impact business, as well as capital solutions for private companies, family offices, and fund groups. For nearly 25 years, TBLI Group has created a vertically integrated ecosystem of education to action through TBLI conferences and TBLI consulting. More about our company can be found at tbligroup.com. This webinar is brought to you by TBLI Foundation, which hosts educational learning experiences dedicated to a better planet. Through the foundation, we build sustainable communities by sharing the people and the experiences making a difference to so many of our lives around the world. Our weekly podcasts bring impact thought leaders that are doing and not only chatting. Now let me introduce my guest today. Good afternoon from Sorrento, Italy, and St. Augustine, Florida. I'm honored to have a very dear friend before I do the full Monty introduction of one of the true geniuses in the impact space. Just some housekeeping instructions for those of you who have never joined. If you have a comment or a question for Hazel, just type it in the lower right-hand corner. If you need to say hello to someone privately, just move your mouse over their name. A window will pop up and you can send them a private message. So today, one of my dearest friends who I've known a very, very long time, who's one of the true champions. I mean, it's very hard. I can't even go through her whole CV. It's too long for the 1 hour show. But one of the true champions who's actually been doing the fight quietly behind the scenes, but getting things done, a true pioneer, a true thought leader who actually has concrete solutions and is going to share that with us today. I'm going to go on mute and let you speak. When you want me to start your presentation, just let me know, Hazel. Hazel, thank you very much for taking the time. If you can, there you go. Hazel, unmute your mic.
Did it?
Now you're okay.
Hi, Robert. It's such a pleasure to see you and I'm sure there's a whole lot of people that I'd love to say hello to who are also on with us. So thank you very much for inviting me. And so I think you have some slides for me, and let me know when you want to start. Let me start.
I'll do that right now.
Okay. Okay. Can you hear me okay? So I want to pick up this whole conversation. We've all been involved in ESG. I certainly have been since the 1980s when I joined up with Calvert on their advisory council with a lot of other people like Amory Lovins, and so many other good people. And we helped to develop the first set of screens for what we then called socially responsible investing. And as you know, the name evolved over many years. It was double bottom line, then it was triple bottom line, and so on and so forth. And so it was all incredibly necessary, but not sufficient. And I think I totally agree with Robert. It laid the foundations, but really what we now have to do is to activate all of this in a very new way. And after spending 20 years on Calvert's social advisory board, developing all of these screens, for corporate performance and all of that, I suddenly realized in the early 2000s that basically corporations, and most of us actually, are puppets of finance. So I decided I had to move up the food chain and encounter directly and engage directly with finance, global finance, which I have referred to for many years as the global casino, the ever more financialization of our global economy along these very, very narrow price-derived GDP growth and all of that baggage of macro statistics, which is not working very well for us, And so basically, that happened to me. And could you give me the next one now, Robert?
Sure.
That happened to me after I spent 6 years as a cabinet-level science advisor in Washington at the U.S. Office of Technology Assessment and the National Academy of Sciences and so on. And basically, I saw up close and personal during that 6 years from 1974 to 1980 how the politics of the solar age was going to be with us for decades, because I saw all the incumbent 19th century fossilized industries and sectors of the economy, not just the fossil fuel companies, oil and coal and gas, but also all of the fossil-derived sectors like pharmaceuticals and agriculture and so many other sectors of the economy. And I saw how all of their campaign contributions to politicians and the way they politicized science policy, that was the thing that really caught my attention, that they made sure that they had their experts from whatever university it was, sitting on our expert panels at the Office of Technology Assessment to do the assessments of new technologies. And I coined the rather naughty term intellectual mercenaries. And they were all over academia. And many of them, it was quite open. We had one, I remember, at Princeton, who had the American cyanamide chair of chemistry. so I thought, oh my God, so to do something about this. So I finally took enough incoming, made enough enemies in that 6 years that I was booted off there after my term, whereas, of course, everybody else was reappointed. I would have been reappointed for another 6-year term. And, I worked with Ted Kennedy on how to deal with the medical industrial complex and how we would have to turn that around somehow to prevention and wellness. And so I made a whole lot of enemies. But the wonderful thing was that it was all of the evidence I needed to write this book, The Politics of the Solar Age. And as you see, the foreword was from my good friend Fritjof Capra, the physicist who wrote the Tao of Physics. And he and I became allies for many, many years on all of these science and technology kind of issues. And so basically, next one, please, Robert. So basically, fast forward to the time that I left Calvert in 2004 and started Ethical Markets Media, because I realized that basically I would have to confront not only the economic models, but also how they had become deeply buried in the algorithms that were driving finance. And so in 2014, I wrote this book, which is only 56 pages, and it's a download for anybody who wants to get it off our site, ethicalmarkets.com. And I wanted to summarize going to all of the other scientific evidence from all of the other disciplines, which had actually invalidated every core tenet and principle of economics. One by one, whether it was anthropologists or thermodynamicists or biologists or ecologists, they all came to the same conclusion. And so in that whole exercise, I discovered my new friend, who is NASA Chief Scientist, Dr. Dennis Bushnell, who has been a wonderful ally ever since. We've done 6 television programs with him. And the reason that we're focusing right now on the planet, which is really the water planet, 97% fresh water, is that with all of the huffing and puffing going on all over the world and the misinvestments in water, is the problem of what we're dealing with here is that everybody thinks we have a water crisis. And everybody has been, inviting me to speak at conferences on the water crisis. And I keep going back to them and saying, there is no water crisis. It's basically a cognitive bias at work called theory-induced blindness, which Daniel Kahneman talks about in his book, Thinking Fast and Slow. And I found that Dennis, to my surprise, had exactly the same view that I did, that unless we looked at the world food system and saw the perilous extent that it was completely based on the planet's 3% of fresh water. And if we didn't expand the world food supply very quickly with the other half of the plant kingdom, which are the salt-loving plants, which are highly nutritious, don't need fertilizers, don't need pesticides, grow in 22 countries, have done for centuries on desert lands, and they restore soils, they capture ambient CO2. I mean, they're complete proteins. The only one that had reached the supermarkets, as you probably all know, is quinoa, which grows wild on the salt flats around Lake Titicaca in Bolivia. So what we did was compressed all of this information to show that economics and the finance based on obsolete economics was now driving us over the cliff. And that really it was finance and all of these algorithms now that drive our financial investments and are probably driving everybody's 401k and the big pension funds and everything else are based on these kind of misconceptions of what's going on. So that's been kind of my activism. The next one, please. My activism has really been all about that. And for the past, since 2009, we have been producing at Ethical Markets the annual Green Transition Scoreboard, where we decided, look, we're going to forget about looking at all of the price-derived GDP numbers and the macroeconomic statistics that all of the financial community uses, which we were beginning to realize is what we call magical thinking, that we should actually look at the science. Let's look at the real world. And so we tracked the first one. We presented in the Copenhagen Summit on Climate, where everybody, the bureaucrats from all of these different countries got together. As you remember, most of you, it was kind of a train wreck. Everybody was naming and blaming and shaming. There were the tier 1 countries, and then the tier 2 countries blaming the tier 1 countries. And so all we were trying to say is, hey, look, here we have just tracked 1.3 trillion of private investments in green technologies, in solar, wind, energy efficiency, LED lighting, EV vehicles, new batteries, green construction, all of this. And So we have cumulatively presented the Green Transition Scoreboard every year, and our cumulative total in this one, which was the one we produced last year, is 10.3 trillion with a T. And basically it completely excludes nuclear. We've never thought that was going to happen. And of course, coal and CCS, that's a mistake as well. The only biofuels that we recognize are algae grown on seawater, which turns out to provide a very good petroleum distillate for aircraft. Actually much better than the petroleum distillates that they use now. This is an algae-derived distillate for aviation fuel. So this is what happens when you take off the economic blinders and the financial blinders and all of the themes and the ETFs and all of this nonsense that's going on now in financial markets, and actually look at the periodic table and see what science can do for us. Next one, please. So basically, many, many years ago, I realized the shortcomings of economics, and I remember my daughter, my 11-year-old daughter, came into my bedroom where I had my typewriter and was working. And she said, "Mom, what do you do?" And I said, "Well, I'm trying to correct economic theory, which is all values based on the price system." And so I decided, okay, let's do it as a layer cake with icing on the top. And of course, the icing is the private sector that we all love and work in, as I do. But that rests on a public sector. And that's really the only thing, those are the only two slices of the cake that the economists recognize because, of course, they're conducted in money, the price system. So the two lower layers are what I call the love economy, which is much larger in every country in the world than the price and price system based markets, is basically all of the unpaid loving work done in communities and households that's done in every country in the world. And finally, in 1995, I and others like Marilyn Waring, who wrote If Women Counted, actually persuaded UNDP to start to do a study on the Human Development Index of exactly the first estimate, official estimate of the unpaid work that was supporting the GDP sectors. And they came to the conclusion that year that basically it was 16 trillion, 11 trillion of the work of women and 5 trillion the work of men, in owner-built housing and all of that kind of thing. And the global GDP that year was 24 trillion. And so if you had added in that 16 trillion, the real GDP that year would have been 40 trillion. So that's how off the indicators were. And of course, the other problem was that Mother Nature's layer, which we're now focusing on with all of the biodiversity stuff, was completely ignored. And of course, we've realized that that's the biggest market failure in the entire system and has now created climate change and, encouraged pandemics and all of the other things. Next one, please, Robert. So what I began doing back many, many years ago, when I wrote Politics of the Solar Age, I began to notice that all of these small cities around the world were simply creating their own local currencies. And they had decided, okay, if the big croupier in our central bank, wherever they were, was not providing enough chips for them to make their trades, that they would create their own chips and really be able to close their own markets, connecting their own unemployed people to the things that really needed to be done in their community. And about that time, I received, I can't imagine how I actually got it, but some wonderful soul sent it to me. This book, which now costs thousands of dollars if you go on to Amazon, very few copies left. This is the most valuable book in my 9,000 volume library here at Ethical Markets. And it is photographs of all of the local currencies that flourished in North America during and after the Depression. Because people just decided, okay, we don't know what's going to happen. You know, the banks were closed. FDR had put together this bank holiday. And so this is the most enlightening book you'll ever look at, because it confirms that human beings are so resourceful. And what really happened there was that I began to use the local currency movements around the world as a signal of how badly run an economy was and how off base its central bank was. Next one, please, Robert. And so if you go on Amazon, buy yourself a copy of that book if you can afford it. And mine is encased now in plastic. And so all I was trying to do, most of the last 30 years or so, is to remind people there's always been two main ways that human beings transact. And of course, in North America during the Industrial Revolution, money and markets, which have existed in human societies, as Adam Smith pointed out, for thousands of years, we have used money and markets, two incredibly wonderful tools, whether the money happened to be shells or wampum or cattle or whatever. And the markets were either local in villages, or they were the kind of extended markets that Native Americans used all over North America. And then there was also the other half, which was still these thriving love economies, still larger in total than the market money-based sectors all over the world. The best example is the sub-Saharan African countries, which the North American economists or the Northern Hemisphere economists have always said, oh, they're poor, you know. Well, of course, every one of those countries, their GDP official monetized sectors are such a small part of the total, and most of the activity is still in informal markets, barter, and of course now with M-Pesa, which started basically in Kenya, is now all over the African continent and everywhere else, completely bypasses the money system and lets people trade on their cell phones and exchange and buy and pay for their local solar energy panels, so they don't need to be on a grid. And so we're in a whole new area now where we're realizing that the information-based economies of the South are based on cooperation, barter, and mutual aid are really the emerging economy in the world. And we're realizing that data is the new oil, or whatever you want to call it. And it's all now about digital assets and new ways of transacting. And even though I have been very critical over the past few years, I've written articles about the insanity of mining bitcoins where now they use the amount of energy of a country the size of Switzerland and produce a tremendous amount of CO2 emissions. In fact, the Chinese have just shut down a lot of the Bitcoin mining. Basically what we are learning now is the politics of money creation and credit allocation. And the NGO groups that I work with all over the world now, particularly a wonderful group in London and Brussels called Positive Money, they have turned the Bank of England around. So the new guy, Andrew Bailey, they just said, okay, no more dud mortgages in your QE. We want green QE. And then they went to Christine Lagarde at ECB and said, "Can you're going to continue what Mario Draghi was saying, whatever it takes, but please, can you make sure that whatever your new QE is, that it's green QE." And so now we find the whole new paradigm of the Green Deal in the European Union and the Green New Deal in the US. It's like, finally, we are going now to the science-based investing that we tried to do. The last one, please. No, there's two more. Calvert and I, back in 2000, Calvert and I tried to show that real quality of life indicators beyond GDP would mostly not be conducted in money units. They wouldn't be price-based. Only about 3 of them are price-based. Instead, they would be in the scientific data that they required. For example, urban air pollution. You don't measure urban air pollution with money. You measure it in parts per million toxic junk in the air. And so we presented this, Calvert and I presented this at the National Press Club in the year 2000. I mean, sank like a stone. We didn't get anywhere because the editors of most of the mainstream financial media are completely brainwashed. And even, some, perceptive economists now, like Stiglitz, are saying, oh, it's the GDP fetish, that we have to somehow go beyond the GDP fetish. So that's all from me, and just show the last one where people can get all of our stuff. We don't take advertising. I fund ethical markets media with my royalties for my TV shows and my books and all of that, So all of the stuff we have on there is freely downloadable. And thank you very much for listening.
Hazel, I'd like to kind of delve into the issue around science-based investing, because I'm getting a lot of people who are realizing the present model of ESG, which is, generating lots of money flows. So it's, getting fees for the fund managers, the research providers, the pension funds could tick the box, but it's not addressing anything environmentally, socially, or addressing climate change. So are there, you mapped trillions going into low carbon initiatives in the green transition. Are there enough scientific breakthroughs to address climate change within the time frame that we have?
There are actually, but the money meme is so powerful. We did a 1-hour special, which we uplinked to PBS stations twice and was seen by about half of the audience in the US. It's called The Money Fix. And it's about the politics of money creation and credit allocation. And it woke a lot of people up. But so far, the money meme is so powerful that, we're like fish swimming in water and we don't notice the water. And so what happened with ESG and with all of this new net zero, all these net zero promises, They are really magical economic thinking on stilts, because basically in the Kyoto Accords in 1998, all of the financial groups descended on Kyoto and decided there was a lot of money to be made if they could trade some commodity that was identifiable enough but different than money. And it turned out to be CO2. So they all decided, okay, we will have emissions trading of CO2. And oh God, I wrote so many articles about that, saying, no. What this is going to do is it's going to create a tremendous amount of trading activity and enrich a lot of people in the financial community, probably without taking one molecule out of CO2 out of the air. And so this is what happened. This whole emissions trading sector, with the carbon credits and all of the various different, things. And so if you look fast forward at what's happening now with all of these net zero promises that companies and governments are making, they're all based on offsets, which are pretty much fraudulent, because they're all saying that they're going to grow some rainforest somewhere else that may already be 3 times committed by other people. I mean, we need 3 planets of forests to be able to service all of these crazy offsets and carbon credits, and so it's more magical thinking. And it's nothing to do with science.
But at the moment, what the clock is ticking, climate change seems to be the problem's accelerating, and massive fires, 50 degrees centigrade in the U.S., massive floods in the south of Holland and Germany, just increasing. Do we have enough time by shifting significant assets to science-based solutions and away from this nonsense of doing, ESG is for me just a death march in the wrong direction, but slower?
Yes, we do. If we finally persuade the ESG community to stop trying to turn everything into money units. See, what the ESG community got caught up in is this strange term, materiality, which, of course, is a rear view mirror thing, you see, because they're still talking about the 19th century stuff you can drop on your foot. And we're in a digital world, and so it's all about intangible assets anyway. And so they haven't made that leap yet. And what they mean, even the very best meaning, wonderful people in ESG who are doing this, it's still trying to turn every new sort of scientific move to sustainability into the price system. How can we turn it into money units? Just get off that and look at the real statistics. Look at all of the amazing. I mean, we at Ethical Markets in 2007, we produced the first survey in 12 countries, north, south, east, and west, where we asked ordinary citizens in those countries, we showed them 2 statements and asked them, which one of these statements do you most agree with? The first one was the money-based GDP and its statistics are the best way of measuring the future progress of our country. The second was GDP needs to be expanded with other data on health, education, environment, poverty gaps, quality of life, whatever. And what we found was in that first survey, which I presented at the European Union in 2007, was that in every country we had supermajorities between 70 and 80% of the public agreed with Statement 2. Of course, we should expand the GDP with all this scientific data that we already have. We repeated the study in 2008 to see if everybody had been regressed into fear because of the financial crash. No, same thing held up. We did it again 2013. Everything still remained the same. And the last one we did last year, we did them all with GlobeScan, and they're all on our website. You just go to the Beyond GDP page. And we still find that in those 12 countries, 73% of the general public still agrees that the GDP should be expanded with real scientific data from all these other domains that the GDP ignores. So, and yet the ESG community, because I think that even in these big pension funds and institutional investors, they're so totally wedded to the price system, and it's now all very deeply buried in algorithms. And so, I've talked to lots of asset managers and I say, look, could you just open up your algo and look at the extent to which there may be some faulty assumptions in there? And they say, oh no, that's above my price grade. I'm not allowed to do that. I just push the buttons. I get my bonus from just pushing the buttons. And I'm saying, well, look, if you go into that algo, could you tell me, how are you valuing fossil fuels? Are you valuing them as fuel, which means that you probably have to cut the price tremendously and turn them into a bunch of stranded assets? Or could you recategorize them as feedstock? And then they would stay in the ground for decades, because carbon is a very valuable resource. It's just we don't want to burn it. We don't want it in the atmosphere, that's all. We're all made of carbon, And I get nowhere with those big asset managers, because, they have this thing, they say, I'll be gone, you'll be gone. And so they're going to get their bonus, and then they go on to something else. IBG, YBG.
Yeah, you see that very strongly. I see more and more of friends of mine who have great talent are leaving many of the financial institutions for these reasons, that the financial institutions are putting out nice press releases right around the time of the World Economic Forum, showing that we're going to do this and this and that. But the reality is that the people that are, doing the work are realizing this financial institution is not serious. They are not serious. So I'm out of here. So I think you're going to be left with are the civil servants, civil servants are important, but not, in this space, that are just going to keep pressing the buttons because they're getting their bonuses and their fees. Yeah. How will this break? Is it just we have to wait for the millennials to get access to all of their money?
The regulatory thrust, for example, started by Mike Bloomberg and Paul, and the guy at the Canadian guy, Paul Carney, Mark Carney. They started TCFD. And did a lot of good groundwork on, you've got to disclose your climate risk because it's quote unquote material in quote unquote price system terms. Okay. And so we joined with our fellow signatories of the UN Principles of Responsible Investing that we've been members of forever, in letters to the SEC, saying the new SEC person, who's very open to this, okay, got to make it mandatory, and the Europeans are going to make it mandatory. All of those things help, but they can't take you all the way because they're so slow. You see, it means that the shifting of the assets away from the stranded assets in fossil fuels, the stranded assets now. There's another list of stranded assets, the 16 big meat producers that are still tearing up the rainforests to run cattle and grow the soybeans that they eat. So those 16 big meat producers are now also designated as another group of stranded assets. So the more you can stress the financial system so that they get more and more worried, like they are now, oh my God, this transition's going too fast. We can't go to the green sector. We're going, oh my God, there'll be a financial collapse, all of that conversation. And so in our green transition scoreboards, we have always identified the best technologies and the best new companies. And I have to admit, for full disclosure, that I'm doing great. And I'm helping to fund ethical markets now from my winnings, and the little companies that are doing great now. They're going on NASDAQ, and they're in the Russell Small Cap Index, and that means they can go into people's pension funds, so on and so forth. So it's happening, but not fast enough. And so the new opportunity, really the only opportunity that I and my buddy from NASA agree on, that can shift the system in the 10-year time window of the IPCC and actually cap carbon emissions in the air. It won't stop the warming. The warming will go on, but at least we can cap the emissions in 10 years, is the shift to salt water plants. And they're all over the system. All that's required to bring a whole bunch of these additional foods online is $100 million advertising campaigns like the Got Milk one. And so we have a page on ethical markets called Halophytes. And if you go on that, or you can watch the TV show, which Dennis and I have, which is playing on our front page, which says investing in saltwater agriculture. Lots of pictures of these foods all over the world. And Dennis and I are calling it the next big thing. And I give private seminars to many family office forums all over the world, by Zoom, of course, showing them the best startup companies in plant-based foods and halophyte plants that we can bring to market, like Salicornia. That's the next one. It's otherwise known as sea asparagus. And we have pictures of delicious plates of food that gourmet chefs use, some in the Netherlands. And so, you see, it's theory-induced blindness together with incumbent industries' political power to dominate congressional action with their campaign contributions. Those are the two things that are holding us up.
Okay. Aaron, I'm going to take some questions from the audience. Aaron had a question. Thank you for your focus on the love economy. There have been quite a few economic studies recently about how to quantify the unrecognized labor that is produced by the household. Do you feel we have progress to make as related to recognizing household and gray market labor as part of the overall economy?
Definitely. In fact, I'm very encouraged this morning with it looks like that Joe Biden in his infrastructure bill, where he has he's going to use the reconciliation method. This is all about really capitalizing that part of the economy which has been the unpaid subsidy to the market sector, like the 52 million unpaid care workers that bolster up the big fees in the U.S. medical industrial complex that are paid hospitals and surgeons and pharmaceuticals and all. I mean, that whole thing is buttressed. Imagine that, by 53 million unpaid care workers. that keep the whole thing going. And of course, we've all realized now that it's not really that additional $300 that was added to people's unemployment checks during the pandemic that's preventing people from going back to work. It's that they can't get childcare. All of the little childcare companies went out of business, and so who is going to stay home with the kids or to look after the elder who may end up getting the Delta version of the coronavirus? And so if you don't turn childcare into a bedrock industry, part of the new infrastructure, and if you don't expand the care of the elderly, and in this new bill does all of those things, it increases Medicaid and Medicare, so that and so what we're doing is bringing hundreds and hundreds of people into paying jobs, and you're not doing that as a charity. Or then there's of course the tax credit for children, which will bring all these children out of poverty. You're not doing it because it's charity. You're doing it because they have to have purchasing power to maintain aggregate demand while we restructure this economy away from the whole idea of measuring aggregate demand only in the old-fashioned terms. It's got to be enormously expanded. And so I've been writing a lot about this lately, and all my editorials on this are free on our latest headlines on our homepage. So that's what Biden, I think, with this, amazingly enough, Bernie Sanders has done an incredible job. I think what they've got is buy-in now so that they can pass this $3.1 trillion with just Democrats on the reconciliation side, while keeping the 1.3, I think it's 1.3 trillion of the bipartisan bill, which the Republicans need to fix their bridges that are falling down in their own constituencies. And so I think that we actually are now in the middle of the paradigm shift away from the old economic libertarian textbooks, where the whole thing was funded by all the oligarchs who got their money from digging stuff out of the ground, the Koch brothers and all those kind of people. And they funded all of these libertarian fundamentalist economic stuff. And the message always was, market's good, government bad. And now we're realizing, oh my God, government, our sovereign bonds are being derated now because of the lack of governance competence in the USA. Did you notice that? We've just, our sovereign bonds have just dropped a tick because we are considered governmentally incompetent. So what Biden is doing now is restoring competence in the fact that the United States knows how to govern itself. I mean, this is a paradigm shift. We can do it.
Benjamin Bingham had a question. Ben Bingham had a question. Capra and others open the door to invisible factors which appear to be qualitative and immeasurable. Is there a danger in focusing only on material metrics?
Oh, yes, totally. I mean, that's what I've been talking about. I mean, the material metrics governed by the price system view of materiality is the worst. And then this is a very perceptive question. Thank you, because you're recognizing that only material metrics are not really the total answer. The answer is actually that we are moving with this paradigm shift to a cultural shift. And this is partly from the year that we were all shut away with the pandemic. And we all began to realize that, what do I want written on my tombstone? What's my life actually about? And all of this wonderful questioning where people are realizing again that we are all meaning-seeking creatures. And so people are looking for, what's my purpose? Now, you see, my purpose all my life is that I've been in love with nature. And I've always considered myself kind of fronting for Mother Nature. And people say to me, well, what's your audience? And I'm saying, posterity. I don't have an audience. If my books had become bestsellers 30 years ago, I'd have been horrified because I knew that the debate wasn't ready for what I was talking about. Suddenly now it is. I am so busy now. I'm doing webinars like this, Robert, 2 and 3 times a day.
Wow.
I'm going nuts. I hoped I could pass the torch, to somebody else.
No, we're going to need you for a long time. Rekha had a question, economic thinking on still, sadly, explicitly true. How can we break out the whatever washing and truly enable funds to move where they will have a powerful impact?
Yes. Well, it really is, I believe, engaging in this conversation about what we are measuring and why, and the extent to which all of the rules. I've just done an editorial of 4 incredible new books, which one of them, for example, shows how it's called Engine of Inequality. And this is a monetary expert, and she has been an advisor to the Fed for decades, very respected woman. And her book just shows how the Fed in the U.S. dropped the ball. They were too timid to actually take up the mandate that they had. They went with the price system and the over-aggregated data, which didn't allow them to look at the granularity of all the people on the ground in so-called flyover parts of the country, so-called rust belts. They got lost in the over-aggregation of the data the Fed uses. And so there's another wonderful book in those 4 that I reviewed. And she is a lawyer, and her book is called the Whiteness of Wealth. And she goes into the tax code and all the well-meaning reforms that we did in the tax code to allow joint filing and all kinds of things like that, which actually hurt African-American families and stuff like that, you see. And so we're having an opportunity, and Joe Biden is really helping this because, like, for example, there's a whole lot of new stuff on the electric grid, which will shift us to a much more green distributed grid. But basically, it's absolutely necessary infrastructure because we realize now that the grid could be shut down any minute now by a cyber hacker. They're in the grid. They can shut down any city in the US just to teach us a lesson, the way they shut down the grid in Kiev in 2017. And so we're realizing now that we have to upgrade the grid. And so you can label that upgrading the grid, or you can realize that it's also climate change because it's going to require every electric utility to have a plan to shift to renewables and to take stuff from distributed grids and to distribute the grid system, as our friend Amory Lovins has been saying for many, many years. So, see, this is a whole system restructuring, very necessary. And if we look at it clearly, take off all the blinders and look at it very, very clearly, we can see the way through to the restructured society that all of us really want. And that is a more equitable, sustainable, harmonious society, living within the limits of the biosphere. Everybody, I mean, our children know this. This is what all these kids have been saying. You see, like the Greta Thunbergs who go to Davos. You know. I mean, it's the children now. This is not complicated. It just means admitting that we've been wrong. See, it's very, very hard for people to admit that they've made mistakes. But we've got to sort of, you know, we're kind of an adolescent species in planetary terms, and we're coming up to graduation, and the planet's the teacher now.
You have been extremely generous for decades for many people. Many people who might not be familiar with your work. What can this audience that is watching now live and the tape version do to help you?
Oh, just please spread this stuff around, and that would help me. That would help me immensely, so that I don't have to keep doing over and over and over again the same kind of thing. You know, so I bore myself to tears. and so, you know, one of the fun things that's happened to me in the last couple of months is that I had a wonderful webinar dialogue with Kate Rayworth, with her wonderful new approach, the donut. And we talked about the cake, which she said she had plastered up on the side of her office for 10 years. You know who I was. And I love the donut. So we're now a team, you know, pushing together. And I've just done the foreword to a wonderful new book by a young French economist that has just been translated from the French. And it's called Toward the Economy of Tomorrow. And it's all about the paradigm shift. So she asked me to do the foreword to it, and it was sent to me. The translation was sent to me by a mutual friend in Brussels who used to be with the EU Forward Studies Unit, and he said, you know, I think that this young woman is kind of your spiritual daughter. So she and I now, we are family. And she loves I've just written the foreword and sent it to her. And she just loves it and says, yes, indeed, I'm her spiritual mother. And I said in my foreword, I've passed the torch. And so you see, there's all these wonderful people coming along that I'm constantly passing the torch to. So please, out there, pick this stuff up and run with it, and let me go back to my reading and writing and thinking and walking on the beach.
Well, I think that we're still going to be knocking on your door for quite a while. Hazel, you're a star, and I'm really very grateful that you took the time to do this, because I know you have a very, very busy schedule. And thank you also to LaRue for helping with the technical background. I'll be sending the link to the replay to everyone who signed up or attended live or tape. I'll send you a copy so you can use this on your platform or share with anyone. And I'll add some information of how to assist or read some of Hazel's prolific writing. Hazel, you're a star. Thank you so much for doing this. I'm very, very grateful.
Thank you so much, Robert. And thanks to everybody. And I'm sorry I was rattling on like that. And if any of you need to get in touch with me, you have an email. You can reach me. It may take me a while to get back to you. But, I thank you all so much for being on this and listening so patiently. Thanks.
Thank you. Thank you all. And Hazel, you stay well, stay safe. And let's hope some sanity returns to the U.S.
You bet.
Okay. If you just press on the red door, you can exit out of this.
Okay.
All right. Thank you. Stay well. See you all soon. See you next week. Bye-bye. Hazel,
Bye.
big